Welcome to the Investing Podcast presented by Tusk Media. The final bell has rung and the market is now closed. So let's move on to an audio and video recap with the Investing Happy Hour.
Hey everybody, welcome back to the Investing Podcast. Told you I was going to do this 3 times today. We made it. Assuming this actually sees the liveness that is the internet. We made it 3 in a row. Happy to be here. I talked to you this morning for the morning market mimosa. Came back with a stock market power lunch, so you know it is time for the Investing Happy Hour. Glad you're here. Wednesday, July the 27th. Still the 27th. Let's jump in. Markets mostly flat. The Dow was down 1 basis point. That's 0.01%. Barely went anywhere. S&P down 12 basis points. NASDAQ was up 58 basis points. Kind of paused there. A couple weeks ago, we did a story about kind of the deviating headlines, and we made the comment that both the S&P 500 and the Dow had hit all-time highs. Meanwhile, the NASDAQ was actually negative for the year. So it's kind of a weird point where you had all these major indices, these major benchmarks, almost contradicting themselves. Today was another day of that. You had the Dow down today. You had the S&P down today. Meanwhile, the NASDAQ reached its highest point of the year. So kind of one of those weird things. That's kind of a trend we've seen the last couple of years, is a lot of deviation between the indices. But just kind of a random bit of trivia right there for you. The global Dow was up 25 basis points, so 0.25%. Gold was up 1.4%. Oil down 2.3%. Again, closed below $42 per barrel, down at $41.94. So that's the quick market update. Couple stocks to highlight for you. Apple, really strong day. Closed up around 6.5%. We talked about this actually at length in our investment committee meeting today. There were 6 of us in a room, and I think the general consensus was that we were pleased to see that because we own a lot of Apple. It's one of our largest positions for clients. But we were kind of surprised to see that it had that much juice in it. We kind of expected it to maybe sell off, and it may still do that over the next couple of days. We're not going to overreact to that news, but it did seem a little bit like market overreaction. But we'll take it. Again, large holding for our clients, so we're glad to see it up nicely. Facebook, another position that we own for some clients, not nearly as many, and we're certainly not cherry picking winners here. These are just big companies that have happened to report earnings recently. But Facebook is up about 8% in after hours. They just released their earnings. They released earnings of 97 cents per share. The expectation was 81 cents. Again, when you're looking at earnings, you're really looking at the comparison relative to what Wall Street and the analysts there expect. So when you beat expectations, typically that's about the only thing that matters. Every once in a while you may issue guidance that says, hey, but the future isn't quite as bright, things like that. But when you start to see a company beating expectations of Wall Street, you tend to see the stock respond pretty favorably. And Facebook, as of the time I walked over here, about 410, 415 or something like that. It's up about 8%. The Fed, they issued some comments today. No surprise here, interest rates are unchanged. They did point to September, but if you've been listening to this podcast for the last 2 months or however long we've been here, or reading our blogs dating back to last year, if there's one thing the Federal Reserve is really great at, it's saying, well, maybe we'll raise interest rates next time. Check back and see. They always leave us with that cliffhanger. There's probably a lot that us broadcasters here at Tusk Media could learn from them in terms of really teasing people. But the Fed, no interest rate hike. They said they might raise it in September. But the comment they made was that near-term risks to the economic outlook have diminished. And if you think about the context of when they were last issuing commentary on the economy as a whole, it was much closer to the B word. That's right, Brexit, hate to use that term, but it was much closer to the B word. And there was a lot of global unrest. Since then, we've seen markets really rally. We've seen S&P and Dow hit all-time highs. We just touched on this just a second ago, but the NASDAQ is at the highest point it's been all year. So we're seeing some strength in the economy for sure. Jobs data has been strong, especially the last month as well. So no interest rate hike there. Last thing we will wrap up with tomorrow, 4:15 p.m. You need to check us out on Twitter because we are doing the Investing Podcast live. We do this every week. We broadcast live, a little behind the scenes action, usually have a beer or two, something like that, and then you get to watch us film. I still haven't messed up an investing podcast when we've done a live broadcast. So we're way overdue. As anyone here can vouch, I typically mess up, I don't know, at least 1 out of every 5 or 6, and we have to just start over. And I haven't done that yet. So check us out on Twitter tomorrow. You're going to want to follow us at Tusk Media LLC. So check that out. We will post the link right at 4:15. You'll be able to watch it live. We'll be right here. Probably have some couple other folks here in the live studio audience, but we'll have some fun with it. We'll try to get some gimmick together for that broadcast. Y'all have a great night. We'll be back in the morning with a regular edition of the Morning Market Mimosa. Try to hit you with a stock market power lunch, and then 4:15 we're going live. Have a great night.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.